Yesterday, I told you guys we're going to go lower. I told you guys we're going to go as low as about $40,000. And as you can see in the charts, we are getting a bit lower. But yesterday on the show, you guys all said, bring in Ben Cowen, because we want to know from him how low we're going to go and when we're going to get there. So as you guys requested, I did exactly what you guys said. And I've got Ben, the man, in the house. Ben, how are you, my friend?
Doing great. How about you?
Good, thank you. Ben, I made a video yesterday saying, if we follow the patterns that we followed in all the previous cycles, then we could go down as low as $40,000. I'm kind of wondering how you see the cycle. And the reason why I'm wondering that is because what I've seen is that the cycle's moving much quicker than any other cycle that we've seen. If you look at the amount of time that it's taken us to get to like key levels, like for example, from getting from the top to the 200-week moving average, that happened much quicker than any other cycle that we did. And if you look at like other key levels, like from the 50-week to the 200-week moving average, it seems like everything's happening much faster than usual. And we tag that 200-week moving average. I mean, that's usually like more or less a bottom level, even though in 2021 we went a bit lower, but we tagged it very fast. I'm kind of wondering how you see the cycle. Like, do you think there's a chance we're going to get a left translated cycle? How do you see the rest of the cycle?
Yeah, I mean, I think we're absolutely in a bear market. What's crazy is Bitcoin tops when it always does. If you look at the ROI from the low for Bitcoin and you just kind of compare the last three cycles, the purple line, this is the current cycle right here. Literally, we topped on day 1,062, and the cycle before that was 1,059, and the cycle before that was 1,068. So the 4-year cycle continues to rule out everything else, right? Like it beats all the indicators. It's just time. The cyclical component of Bitcoin just continues to strike again. So the first thing I do is say, all right, well, if the peak is when the peak has always been, maybe the low will be when the low has always been. And that's kind of the base case for me, is if you extend this out to the next low, it would look like the low would be on day 1424, 1432. So if you actually put that in, it corresponds to the first half of October. Now, the reason why October can make some sense is because if you just simply look at the last two cycles, last cycle was November to November. The cycle before that was December to December. And so it's relevant to consider, hey, if the top is when the top always is, maybe the bottom will also be when the bottom also, when that usually is. The other reason why I think October has maybe like a 50 to 60% chance of being the bottom, probably even higher, let's say 60 to 70, is if you look at MicroStrategy, one of the interesting things is that last cycle, MicroStrategy did the same thing as doing this cycle. It topped out a lot earlier in the cycle. It topped in February of 2021. Bitcoin topped in November. Now, last cycle, it took MicroStrategy 98 weeks to bottom, and 98 weeks from MicroStrategy's top puts us in exactly October, the first half of October of 2026. So my guess is that the low will be in October. I think there's going to be a big counter trend rally before then. Maybe this summer would be when we get some type of larger counter trend rally. And then also, I will say, there is a chance that it could come sooner, right? And if you told me...
You mentioned May.
I've mentioned May. Yeah. The reason why I've mentioned May is because sometimes you will get capitulations, as you already pointed out, right? We already hit the 200-week moving average. Like, we've already hit it. And last cycle, we didn't hit it until June. The cycle before that, we didn't hit it until December. It's only February. I mean, it feels like the bear market's been going on for 2 years at this point. But it's only February, and we're already at the 200-week moving average. So is there a chance that because we topped on apathy, we'll bottom at a different time? If you look at social interest in crypto, this orange line, retail interest has been leaving crypto for the last 5 or 6 years. Institutional interest is what went up. And if you color code Bitcoin by the social interest, the only other time in history that looks comparable to this one is, in fact, 2019. There's a lot of similarities between this and 2019. In fact, it was under these types of market conditions that I started my YouTube channel. I started my YouTube channel in the summer of 2019. And what essentially happened is in 2019, Bitcoin topped 2 months before quantitative tightening ended, just like it did this time, right? Like back then it topped in June, QT ended in August. This time Bitcoin topped in October, QT ended in December. So a lot of people QE as a reason for crypto to do well, But the problem is that like the amount of liquidity going in is just not enough, right? Like it's not enough to justify a bull market right now. So I feel like we're in this post non-euphoric top, and we're watching Bitcoin go down, but it is not dropping as quickly as it has in prior cycles. And that's the crazy thing. It feels like it is, right? Like it feels like it's dropping quicker. It got to the 200-week moving average quicker. But the reason why it got to the 200-week moving average quicker was because it didn't extend as far beyond the 200-week moving average in the bull market. Now, let me give you an example. In 2018, when Bitcoin topped, in 2017, it took about 8 weeks for Bitcoin to drop 70%. This time, it took about 16 weeks for Bitcoin to drop 50%. So we're not dropping nearly as quickly as we normally do in under euphoric tops. But the reason why it feels so bad is because we didn't get the euphoric top, right? We didn't get the mania phase, and therefore a lot of people have a harder time, sort of accepting the drawdown after the non-euphoric top. But I do think that October is the most likely time period. The second most likely is May. And the reason I say that is because sometimes when you get these drops and people just give up quicker, and if everyone's like looking at the 4-year cycle and thinking like, well, okay, we have until October, there are scenarios where the market could bottom out a lot earlier if the capitulations start to get really bad and there's not a major counter trend rally. And I'll give you one example. Bitcoin does not have a monopoly on the 4-year cycle. And I think I've pointed this out many times on your channel, but you can see
the S&P does the same thing.
Exactly. Every 4 years, 1958, 62, 66, 70, 74, right? 78, 82, every 4 years. But look, when you zoom in to some of these lows, when did the S&P bottom in 1966? It was in October. When did it bottom in 1974? It was in October. But when did it bottom in, say, 1970? It was in May. So May is a potential time. And also, too, if you look at MicroStrategy, one of the things you'll notice is that last cycle, MicroStrategy basically did bottom in May, right? Like the major capitulation low occurred in May, and then we just like swept that low 7 or 8 months later. So I would say the most likely time is October. The next most likely time is May. And then if it's not either of those two, then it's just like an equal distribution of probabilities among the remaining months. But those are the two most likely times that I would see.
Okay, let's talk about a level, because usually when we bottom somewhere near the 200-week moving average. I mean, yes, in 2021 we went below it on the FTX capitulation. We went about 20 or 30% below it. But like, I know you don't like forecasting the levels for the tops or the levels for the bottoms, but like, how do you see where we could go? Because my base case was the bottom of the cycle would be around 58,000, which was the 200-week moving average. But now we're there, and we've got all this time left between now and May or now and October. Where do you see us going?
Yeah, so the first thing to note is that in 2019, excluding the pandemic drop, Bitcoin dropped about 52, 53%, right? So that's what Bitcoin just had, right? It just had its 52 to 53% drop. So the easy time to be bearish was like, from Q4 into February, right? And that was going into 60K. What's really interesting, if you look at 2018, Bitcoin found support at $6,000, right? So it basically is just a 10x difference. Instead of finding support at 6K back then, it ended up being 60K now. Back then, what happened is Bitcoin just bounced around for the rest of the year above 6K, except for some slight drops below it in the summer. And then we ended up going to $3,000 later that year. What I would say is this, Rand, is there's a few indicators we can look at. The first one is just simply, if it's not broke, don't fix it. And one of the things we know is that Bitcoin's bear markets have gotten a little bit more bearable, if you want to call it that. The first bear market was a 94% drop. The second bear market was an 87% drop. The third one was 84. The fourth one was 77. So what we notice is that every cycle, the drops are getting less dramatic, right?
Yeah.
They're
So
getting less dramatic.
You'd say this one would go 70% down. 70% down from 120 would take us to 40,000.
Right. And in fact, after the 2019 top, I know the pandemic is not a great example, and I'm not saying we have to repeat that. But really, though, if you take it from the 2019 drop and you include the recession, it was about a 70% drop from the highs. Now, again, I'm not saying it has to play out like that. It'll probably be a slower move, if anything. but about 70% could make a lot of sense. Now, there's a couple of indicators other than the time-based indicators that I think we should look at. One of those is supply of profit and loss.
Yes.
If you look at this, every prior low for Bitcoin occurred after these two metrics crossed each other, and they haven't crossed each other yet. So once they do cross, I think right now it corresponds somewhere in the 60K range. Or no, not in the 60K range. I don't know, like 50K range.
It's
yeah,
50,
40, 50K range.
It's 45 to 50 if you look at where they're going to cross. Because what you'll find is that they usually cross and they continue for a while. So they don't touch and move on. They literally cross. And that's like 45 to 55, that level.
Right. Yeah. Exactly. So I mean, it certainly seems like we likely will have another leg down at some point. Usually, that next period of weakness occurs going into April and May. And if you look at Bitcoin, you'll find a lot of major lows in bear market years in February. So this is February 2018, February 2022. This is February 2026, and you also have over here, you have February of 2014. But then every single low that was formed in February was met by a lower high in early March. So you have lows in February, lower highs in early to late March, and then that led into the major drop that we would get into April and May. So I think that is the most likely outcome here. Now, there's one other thing I want to show you guys. This is not it's not as common of a chart to talk about, but if you look at the balance price, right? So if you look at Bitcoin's price history, you can see that it always peaks out when it hits the terminal price. The only two times in history where it topped before hitting the terminal price were this cycle and the 2019 cycle, right? Very similar macro conditions. But in every case, even after the 2019 top, because of the pandemic, but in every midterm year, every single case in history, Bitcoin has always gone down. First, it goes below the realized price, and then it goes below the balance price, right? So first goes below realized, then it goes below the balance price. Today, the balance price, the realized price is 55K. The balance price is 40K. So if you see Bitcoin below those levels later this year, I think that would offer a pretty good opportunity. And then the other thing you can look at things like the MVRV score and see that it usually bottoms when it goes below zero. And we're not below zero yet. So I think a lot of these indicators are just going to play out like they always do. We'll see them reset. And then I think by the end of this year, a lot of the frothier excess stuff will be gone, and it'll allow people to focus more on what matters in the next cycle.
I mean, all roads are pointing to somewhere between 40 and 55,000. I mean, basically all the stuff we've looked at is points to around 40 and 55,000, which is quite scary. I mean, what do you see happening to dominance? I know that's your favorite. I know dominance is your favorite drug. So, like, how does this? Because on the one hand, Bitcoin bleeds, but on the other hand, usually in these markets, altcoins also bleed to Bitcoin. So, what are we going to get dominance back at 70, or what are you thinking?
Not yet. I think right now we're in this sort of this post 2019 style top for dominance where it's struggling to really go up. And the reason it's struggling to go up is because altcoins already got annihilated in the bull market. You know, altcoins already got, I mean, look at a lot of the altcoins. They're basically at 2022 lows rather than near their 2021 highs. Altcoins are already annihilated. So now that when Bitcoin goes down, yes, it's taking altcoins with it, but dominance isn't really moving because they're just it's harder for those altcoins to drop as quickly when they've already gone down like 95%. What I think is likely going to happen is that this will likely continue for a while where dominance doesn't see a major spike immediately, but I think that you will see dominance go back up to the highs back up here, but it's going to take a while to get there. And if you think about how this played out last cycle, and not the last 4-year cycle, but the last business cycle, that last cycle it operated within one 4-year cycle, the way that it played out is you had your first top by dominance around the time that quantitative tightening ended. The second top was during the next Bitcoin bull market when it was going parabolic and it was leaving altcoins behind. So you could argue that by the time Bitcoin dominance gets back up here, hopefully Bitcoin is back in a bull market. So I think the point is, and I've said this many times, is that it's hard to justify holding altcoin, in my opinion, right now, because first of all, Bitcoin's in a bear market, and if Bitcoin goes down, it's going to take altcoins with it. And then second of all, whenever the bull market does get going, there's a good chance that if Bitcoin were to go parabolic, it would actually, Bitcoin dominance would go right back up to the highs. Now, there is a case to be made that altcoins could take Bitcoin dominance lower initially when the bull market starts, but as the bull market gets going, Bitcoin dominance should go back up to these highs. But I think it's going to take a while. My guess, the most likely way that this is going to play out, if you look at like total 2 minus USDT divided by Bitcoin, so we're basically just looking at the relative valuations of alts against Bitcoin, I think we're going to retest the lows here that we set at some point. And I think the most likely time to retest them would be like, you know, sort of the June, September, December timeframes. That's when things typically reverse for things like alt Bitcoin pairs and dominance, the summertime, September, or the very end of the year. And I don't really see a major low forming in alt Bitcoin pairs in the short term. Even though I'm not expecting dominance to go back up to the highs, I think we're just going to have this slow bleed for a little while, and then things might look better next cycle.
Okay, let's move our discussion a little bit to gold and the commodities, because a very, very good place to be has been gold and the commodities. I remember when you came on the show not that long ago, and you're like, I bought all my gold at under 3,000, and that was the level. And I'm kind of wondering, since then it's obviously gone parabolic. Do you think gold's topped, or do you think gold is topping?
I think gold has probably more room to run. Silver, I think, has probably topped for the year, if I had to guess. And I want to give you 2 great examples as to why that could be. There's plenty of times in history where silver tops in like January, February, March, and April. Like it tops in one of those earlier months in the year, but then gold tops a lot later. So one great example is 2011. Silver in 2011 actually topped in April, but gold, sorry, I think I overlaid the wrong thing. So let me pull up gold and then overlay silver. So we have gold here. We're going to overlay silver. Okay, so silver in 2011 topped in April, but gold did not top until September, right up here. And so silver has this way of topping earlier. And then what you'll notice is that on a macro lower high by silver, gold has a higher high, right? If you look at gold on the weekly, like it doesn't really look that bad, you know. I mean, it looks like it had a wick up, but then it also had a wick down. If you look at it without the wicks, like you wouldn't even look at that and think it's a bear market, right? Like you would say, all right, the weekly closes.
That's a great chart,
right?
Like that chart's going up only.
Right, like the weekly closes continue to be higher. That 2011 is not the only example. If you look at 1973, and there's a lot of reasons. 1973 is actually my favorite comparison. In 1973, it did the same thing, and in fact, it's even closer to today. What I think is happening is silver topped in January, February. Gold didn't top until December of that cycle, right? 1974. So silver topped first, gold continue on later. And one of the reasons why I like looking at that 1973 comparison is if you look at the S&P 500 divided by gold, it's breaking down right now from the same level it broke down from in 1973, right? Like this is a very similar
when you look at that, because I've seen you posting a lot about this chart, and I want to try and understand. I know that this is the chart of the S&P denominated in gold. Is that because... Like I'm trying to understand the logic of watching that chart. What is the relevance of looking at the S&P denominated in gold? Is it
So it's the same.
Go ahead.
Yeah, it's the same idea. You know how like we look at altcoins against Bitcoin a lot of times.
Yes.
Like Bitcoin was able to hide the weakness in the altcoin market for years because Bitcoin was going up, even though altcoins were generally not going up that much. In fact, the advanced decline index of the top 100 cryptocurrencies has actually just been going down since 2021. And this chart really shows you that it's mainly because of Bitcoin that we even had a bull market at all in crypto. You could argue that in the same way that we look at altcoins relative to Bitcoin, it makes sense to look at like stocks relative to gold. And the reason for that is because, you know, a lot of times markets will go up just because there's a lot of money printing, right? And so the reason I look at this chart is because it shows me that there's actually weakness in the stock market. It's not obvious if you look at the USD valuations because stocks are basically at all-time highs, but it also wasn't obvious to a lot of people when you looked at altcoins that they were weak, because if you look at their USD valuations in 2024, they looked okay. But if you looked at their Bitcoin valuations, it showed you that there was a ton of weakness. In 1973 and in 2008, the stock market broke down against gold, and then shortly thereafter, there was a large correction in the stock market.
But you could get a large correction. You could get a large correction in the stock market, but you could also get a parabolic rise in gold. So if you got a parabolic rise in gold, the chart would look exactly the same as that, right?
So that's actually basically what happened in 1973, but it was gold. So what happened in 1973 when this broke down? Gold continued higher.
Yes.
And stocks went lower, right? So if you look at the S&P 500 in 1973, let me switch this to a new scale here. So okay, so now you can see this orange line here is the stock market.
Yes.
So you can see in 1973 when it broke down, the stock market then had a pretty big drop. So stocks were going down while gold was going up. That was the hard thing about it. And we're already seeing that, by the way, with crypto, right? Gold is going up and crypto is going down. So the reason why it's happening in crypto first is because crypto is further up the risk curve. Eventually, it's also likely going to happen in stocks. It just hasn't happened yet, but it likely will in the coming months. In fact, midterm years historically are the weakest years for the stock market. So, I think there's going to be a correction by stocks, and I think they'll likely form a low probably around the same time that Bitcoin does, maybe October, could be sooner. But yeah, I mean, I think that it's important to have these hedges in your portfolio of metals, because there does exist a world where metals continue to do well and stocks start to underperform, just like crypto has.
But when you're saying metals, you're saying silver you think is topped. So when you say metals, gold, and what about copper, for example?
If you look at the gold silver ratio, and I'll talk about copper in a second. If you look at the gold silver ratio, what it shows us is that anytime it hits this level, it then tends to bounce for a while. You can see that this ratio hit 1987, 1998, 2006, 2011, and now again in 2026. Usually when the gold silver ratio hits these lows, it then bounces for at least a year or two. And that's the reason why there exists a chance that silver puts in a new all-time high this year? Absolutely. But the only way it's going to happen is if gold goes much higher. So it's kind of like the same argument, like from 2023 to 2025, at least until April of 2025, there was no reason really to be in a lot of altcoins. You could just buy Bitcoin. Now you could argue, yes, silver could go up, but it's probably better to be in gold for the next year and a half, if I had to guess. If you look at other metals like copper, they continue to be relatively bullish. Honestly, I think we've transitioned for a while now away from frothier things like altcoins and meme coins to real things. Like, we've seen that transition in the markets. The only issue that I have with copper is if you look at its valuation against gold, it just continues to bleed.
So it's the same argument. It's like, if you're going to hold the metals, hold Bitcoin. I mean, if you're going to hold the Bitcoin of the, like, so gold is like the Bitcoin of,
right.
Yeah.
Hold the blue chip of the asset class rather than hold everything else. Now, again, with that said, I do own gold. I still own some silver, and I have positions in other metals as well. But I do think that when you look at charts like this, it does make a strong case that, hey, if you're going to be in metals, you're probably better off having your largest position be in gold. Just like if you're in crypto, you're better off having your largest position be in Bitcoin over the long haul.
So if I'm understanding you correctly, you're long metals, you're short, not short S&P, but you're neutral S&P. So you're not that excited about the S&P.
So I'm not that excited about domestic, so United States, but I'm more bullish on other places, right? So like Latin America looks pretty good. China has been really bullish for a while. There's a lot of even the DAX, the Germany. I mean, a lot of international markets look fine to me. It's the domestic ones that are starting to struggle, and who knows what the reason is? Maybe it's because of all the uncertainty going on in the United States. I don't know, but I'm still fairly optimistic about international indices. Obviously, if the U.S. takes a hit, they could take a hit too, but I think it might be somewhat disproportional. I've been bullish on energy for a while. I've been bullish on manufacturing, and then also like defense stocks. Like all of that seems pretty good. In fact, one of the things that I think a lot of people should look at are some of these like sector specific ETFs like XLE. If you look at XLE, which is the energy, it's like the energy select ETF.
Yes.
It's doing really, really well. I'm not saying people need to go FOMO into it right now,
yes.
But one of the things you'll notice is that if you look at Bitcoin divided by the XLE and you look at yearly candles, every single midterm year, Bitcoin bleeds to energy, right? Look at 2014, Bitcoin dropped 50% against energy. 2018, 2022, and again, 2026. Also, by the way, Bitcoin every midterm year bleeds to gold, right? 2014, 55% down, 2018, 73, 2022, it was 64, and it's already 34% down this time. So again, a lot of these things are playing out how they always play out. The only difference is that we didn't have a blow off top. I think the mistake people are making is thinking that because we don't have a blow off top, we wouldn't have a bear market. But 2019 showed us that you still have bear markets after apathetic tops.
I have to ask you something. So whenever I ask you a question, you go back to 1970. You find this crazy correlation between the energy ETF and the Bitcoin ETF. Like, how do you find these correlations? Like, what made you even look at the energy correlation to Bitcoin so far back? How do you get these ideas?
Probably because I have too much free time. I think one of the things is that there's a famous saying that I've always heard, and it's there's always a bull market somewhere, right? Yes. And when I was thinking about that, I was like, because there have been prior years in 2018 when we were in a bear market, I basically just like sat around and twiddled my thumb. I mean, I was working on my dissertation back then, so it's not like I wasn't doing anything, but I basically just like ignored the markets in 2018. So like, this sucks, crypto is dropping, we're in a bear market. But then I started to learn in other midterm years, I'm like, just because crypto sucks in midterm years doesn't mean we can't make money. We just have to be willing to pivot to where the bull market is. I don't control the market. No one controls the market. We're just we bow down to the market, right? Like we see this is what the market is doing, and we can either trade the market we want, or we can trade the market we have. And I like to trade the market we have. Would it be beneficial for me if crypto was going to the moon and we had the biggest alt season ever? Absolutely, right? But that's not the reality. And so I want to figure out, rather than sit around and wait for the bear market to be over, I want to know where the bull market is so that I have more money to buy crypto when the crypto bear market is over.
So, okay, let me ask you a question. A lot of people have got a little bit of money to invest. They got like, let's say someone's coming into the market now with money. They want to hold assets for the next year, 2 years, 3 years. If you were coming into the market now with a holding investment horizon of, say, 3 years, what do you buy today?
I think you slowly scale into some of the metals, probably not silver. Yeah, I think if you're going to buy silver, I'd wait till like mid 2027 potentially to buy it. I think you get into some of the metals, you probably get into some of the manufacturing stocks, some of the energy stuff. When you say some of the metals,
so some of the metals being copper, what else? Like uranium, lithium?
There's uranium, there's lithium, there's palladium, platinum. Like platinum's also kind of spent for a little while, but there's nickel. Nickel looks potentially earlier on in its bull market than some of the others. So you look at those. You look at energy stocks as well. A lot of the major recessions that we've had in the U.S. have actually occurred after oil spikes. This is a really good chart. Look at oil. If we look at crude oil and we switch this back to monthly candles, a lot of people think that that a recession means lower oil prices, which it eventually does. But usually it's oil spiking that then leads to the recession. So if you look at this, the green shaded regions are recessions. Look at 1990 and the .com era, 2008. A lot of these spikes by oil then preceded recessions. The issue is that we had a spike by oil in 2022, but we haven't really seen one since then. So I almost wonder if people finally get the long-awaited recession whenever oil breaks out. And then basically makes it so that the Fed can't cut as much as they want to, despite the weakening labor market, because now we have inflation to deal with. So one of the reasons I'm bullish on energy is because I think at some point oil's going to spike. And when oil spikes, that's probably the time to sell energy. But I've been bullish on energy, manufacturing, defense. I think there's a good reason to be bullish on defense and to get into some of those names. I would wait on crypto. I'm waiting on crypto. And I'm waiting mostly on domestic index funds for the United States. I'm I've spent more of my time and energy looking at international markets and getting into those. I'm more interested in having some cash by May to October to get back into things like Bitcoin and Ethereum and some of the domestic names.
All right, so let's try and brace ourselves. I mean, we've got a couple of months until May and a lot of months until October. Ben, thank you so much, my friend. It's always good to have you on the channel, buddy.
Yeah, it's a pleasure to be here. Thanks for having me. I look forward to how the markets go this year, and hopefully we have better times.
It's May. Hopefully it's May and it's not October. Let's just hopefully May and not October.
Honestly, right? I could see a scenario where that happens, because like this is the first time where it feels like a lot of people are on board with it being a year-long bear market. You know, I'm like, is there a chance we just get a major capitulation in May and then everyone waits for a lower low in October and it ends up being a higher low? Like I could see that happening.
Does it worry you that when you go onto Twitter and when you go onto like all the chat forums, does it worry that like there's no more hodl, there's no more buy the dip, there's no more like I think 𝗕𝗫𝗍𝗪 actually said it quite smartly. He said something like there was this virus and now the virus is dead, and he referred to the virus as the Bitcoin virus that got everyone so infected. I must say I've never doubted the long-term future of the asset, but actually all Bitcoin has is its energy. And when I look at Bitcoin, I say, hold on a second. The way I look at Bitcoin is, first I thought it was money. I realized it wasn't money. Then I thought it was a store of value, but then all the stores of value had the best bull run of their lives and Bitcoin didn't have a bull run. And then I started to question what Bitcoin actually was. So now in my mind, it can be one of three things. It can be money, which it's not. It can be a store of value. And if it is, then maybe it wasn't a store of value this cycle, but it could be a store of value in the next cycle. The third thing is it can be a meme that now big institutions play. So it's just a measure of frothiness in the market. And when there's extreme frothiness in the market, then maybe Bitcoin actually ends up having a run. Then I took that theory and I said, with that in mind, I think a lot of people have lost faith in the asset because they don't know what it is. Like I think a lot of people held Bitcoin because it was a store of value, and then when the stores of value ran, well, you know, Bitcoin didn't run. And that's I think what like, it's the first time that I've kind of been worried about Bitcoin.
Yeah, that's why I think in midterm years, one of the safest things to do is to not have too many deterministic price predictions, because no one knows where it's going to go. You could argue Bitcoin's been in a bear market before October, right? Like it feels like it has. It feels like it's been a bear market for over a year now.
But you still keep your conviction. You still keep your conviction in the asset. Like, I mean, I hear the charts. The charts go up. The charts go down. We'll get a new bull market in October. But like, at some point, Bitcoin has to become something, or it's nothing. You know what I mean? Like, if it's not a store of value and it's not a money, and so what is it? Because if I don't know what it is, I can't market it.
I mean, first of all, it's a levered version of the Nasdaq, essentially. I also think it's
but the Nasdaq, hold on, the Nasdaq's been going up and Bitcoin's been going down.
But the Nasdaq still topped in 2025. It has not put in an all-time high in 2026. It's been putting in It's been putting in a lower high. Topped in 2020.
Yeah, sorry about that.
It's still similar to 2019. The reason the Nasdaq is being able to go up longer is because I think there's just more passive flows from like 401ks and whatnot. I also think Bitcoin is an expression of excess liquidity, and we've really been in an excess liquidity regime for like over a decade. Really since like 2009, liquidity has been pretty excessive, with the exception of 2019 and then the last couple of years where things have started to get a little bit crazier. Do you know in 1999 the tech ETF was launched, the QQQ, and then it had like a year-long bull market, and then it had like a 2-year bear market. So, you know, there is an argument that Bitcoin has already been in it. I mean, if you look at Bitcoin's valuation against other fiat currencies besides the US dollar, there's plenty of fiat currencies where it actually topped in late 2024, early 2025.
Because the dollar corrected so sharply.
The dollar has been so weak. If you look at like Bitcoin against the euro, Bitcoin barely went above like where it topped in late 2024, early 2025. It barely went above it. So I think there's an argument that Bitcoin has already been in a bear market for a while. It'll likely continue to be in a bear market. The reason why people are losing conviction, I think, is because we didn't top on euphoria, we topped on apathy, and it just doesn't seem fair. Like, why does Bitcoin have to drop when it didn't even go up as much as it normally does? But I think it's a necessary, it's like a maturing phase of Bitcoin. How old is Bitcoin now? Like 16 years old? It's like it's becoming an adult, and we're having to go through this cleansing phase in the market where we get all this excess stuff out. There's just been a lot of malinvestment of capital, into garbage, and because of that, it makes the industry look bad.
So what is Bitcoin?
I mean, first, I've always said don't marry an asset class. I've said it's a long time. I've said it's a levered version of the NASDAQ, an expression of excess liquidity. I mean, I like Bitcoin. I like the technology. I like the distributed ledger. I like all of that stuff. But at the end of the day, I use it to make money. Like, I'm not married to it or anything like that. It doesn't have to be something that, people identify as. It's just one asset that can do really, really, really well when liquidity is moving freely. And the one thing we know is that the only way that the politicians know how to ever try to fix anything is to just print. And eventually they will. Like, eventually we'll get back to those times where there is excess liquidity. But for the last 3 to 4 years, we just haven't seen that. And so it's making a lot of people lose their conviction. I think those times will return, but they're not going to return, they're not going to return in the short term.
Do you have any views about 𝗕𝗏𝗏 coming in as the as the new Fed governor? Do you know anything about him? Have you got an opinion about him? Like,
No,
what we've read about him is kind of like no one knows. Some people say he's actually quite hawkish. Trump says he's confident that he's going to reduce rates. Like, any opinion?
When that chart I showed you earlier where the S&P bottomed in like May of 1970 instead of October?
The 𝗙𝗏𝗏 chart.
What was interesting about, Volcker was in the a little bit later, but in 1970 when the S&P bottomed, I believe, and it was in May. Guess what happened? Almost identical to what's happening right now. Arthur Burns became the chair of the Federal Reserve, and he was a lot more dovish, I believe, than the person who came before him. And maybe that's what allowed the stock market to bottom in May rather than October. He actually became the Fed chair in like January or February of that year, and then the market ended up bottoming in May instead of October. What if the same thing is happening? Like, what if we're getting in someone who's a lot more dovish? Perhaps the market will bottom sooner. The only reason I haven't expressed the only reason I think October is the more likely time frame is because the S&P hasn't even started to correct yet. Like what point is there talking about a bottom for the S&P when it's still basically at all-time highs? So
and it's due a correction. It's definitely due a correction.
Yeah, I think they're gonna try to run things hot at some point and print. I just don't know. I don't know how long that's going to take. What I kind of think is going to happen, more of a longer term view, is I think this year is a bear market. I think we'll probably have a bull market next year. I could see kind of a repeat of Trump's first term, where there is like a big drop in the election year, not because of a pandemic, but I think by 2028, I think the labor market weakness is going to be very apparent to everyone. We've already seen hires are down, job openings are down, job quits are down, everything is low. The only reason the job market doesn't look worse is because layoffs haven't really, layoffs are still relatively low. But all it's going to take is layoffs to start, and when layoffs start, the unemployment rate becomes nonlinear, and then the stock market sells off. So I could see a correction in 2026, maybe renewed interest in 2027, and then a larger drop in 2028, and then perhaps we get like a K-shaped recovery out of that as we go back to less uncertainty in 2029, 2030.
Ben, thank you so much, my friend. Thank you. It's really good to have you on the show and a great discussion. Thank you so much, my friend.
Thanks for having me.
Okay, you heard it from Ben. Wow, what an amazing conversation. Guys, before I go, just remember that if you sign up for your CAST card, and I told you I remembered using the CAST card yesterday because I bought my flight ticket. I paid $5,500 for my flight, and I got something like 8% back. So I got somewhere around like $370 or $400 actually back for buying the ticket with this CAST card. Best thing, really one of the best crypto products that I use. I did say to you guys, if anybody signs up using this link over here, between now and Tuesday, we'll upgrade you guys to a gold card, and the gold card is the solid gold. Solid gold. It's $5,000 a card, bro. That's how much they cost. $5,000 a card. All right, so sign up. Use the CAST card. It is the best crypto product out there. It really, really, really is the best crypto product out there. I'll see you guys again tomorrow. Hopefully the market gives us something to talk about. Until then, trade well, my friends.